It is Wednesday, March the 30th, and we've got one more day after today for the quarter. And we have, again, some crazy activity in this marketplace. Let's get into that. Okay. It really depends on when exactly I'm looking at my screen. Right now, it looks like it's neutralized out a bit. The indices, according to Yahoo Finance, which I should refresh because honestly, this thing is like every minute a little different. We've got most of the major indices down. We've got crude oil coming back up to the 106 level. It's so volatile. And I was like really not so excited yesterday, but we talked about it, about how I think that the news flow coming out of China has got people throwing numbers out that are completely unrealistic. So maybe people figured out that that's actually the case, but we just don't know. Right now, the market's super volatile and want to be very careful out there, especially at least until we can get some kind of trend going on as we move through month end, or quarter end, which we know already has its own special sauce. Before we get started, I have a couple of things I always have to say. Past performance is no guarantee of future returns. You guys know that, but still have to say it at the beginning of the show. And also, this is something that for those of you that are my subscribers, you should already know about, but I just want to make sure if you're new and you're just seeing this, we do have a wonderful conference in San Francisco on May the 15th, and it is at the Ritz-Carlton in Half Moon Bay, which this price for a room not includes room and a meal to hang out with myself and two other Gurula folks, as well as potentially we've got a whole slate of guest speakers. We haven't announced all that yet, but at a minimum, at $450, this is just flat out value. So if you happen to be interested in coming to San Francisco, this is a gorgeous resort. It'll be a really great time, and I'd love to see you there. Okay, now let's go through the markets, commentary, and stuffs. Okay, so we do have a lot of the income numbers coming out. And so we have domestic income. We still have tomorrow a lot of the other income numbers and PCE, which is an inflation metric that the Fed uses over and above CPI, but they're very similar. Has to do, we'll go through that tomorrow anyways, and what the differences are. But the domestic income numbers actually came in pretty well. So that whatever's going on in the marketplace, I think is just quarter end more than anything else. But these are the numbers. You had a big uptick in the third quarter, and the annual changes are fine. I mean, to be honest, that just means that, like, if we were to take the full year, it looks a particular way. But these quarterly changes, to me, the takeaway is they kept up with inflation, which is a metric that people are considering. Now, just to give you a sense, because sometimes people are like, well, how much do I trust these numbers? So I'm not feeling these numbers. Paychex came out and reported a great quarter. I mean, Yahoo Finance and other media sources said otherwise, but it was actually a really fantastic quarter. And they are definitely seeing essentially this same trend. So just realize that these numbers are absolutely in line with what all the companies are saying, with what the other metrics that are out there that you might use to see if there's something going on in these numbers. All of it is pointing to the same place, which is thus far, income levels have been able to offset the issues with inflation, and also the breadth of how it's spread out is adequate. It's never great if you're jobless and you're dealing with 7% inflation, but it is adequately broad in the increase in wages to offset inflation. That's going to be something that we're really going to have to watch. So far, the immediate quarters, it doesn't seem like it's going to be a really terrible thing, but that would be the one thing that would make it very big of a sensitive thing for the Fed to continue to raise rates. And I just mentioned that because so everyone is just super aggressive on this issue, as if there's nothing to watch for. But in fact, there are a couple of things that we probably should just make sure that aren't destroyed as we try to fix one problem and address another problem. Corporate profits came in really strong. Now, some people might start to see this as a decline because the second quarter was amazing quarter. And I had mentioned that before, actually, that might predate when we started officially filming these things. But I had mentioned that the second quarter or the third quarter earnings, while they were very strong, were not as strong as the second quarter. I would say the fourth quarter earnings were strong, but they were also not as strong as the third quarter. And so we are starting to see that show up in the numbers. This is going to be a big deal because we have a lot of things going on that are very uncertain on this earth. And we're going to want to know these corporate profits 100% relate to tax revenue. So we kind of have to see how all of that plays out. as things progress. Now, again, we are still in this bizarre quiet period. So a lot of the news flow that you'll see, a lot of the things that are said, a lot of them are just rumors, or kind of like what I call official rumors, so to speak, because they're not really, as companies enter the quiet period, and after this week, all of the big cap techs that people care about, you know, the FANG stocks, if you will, they typically will report that last week of April, that last week of April, that first week of May. And so they will also enter the quiet period. Hence, after this next week, this becomes more or less a momentum traders market, or a traders market. And what you want to do if you're more fundamentally based is just have your entry points and use them wisely, and then take profits where you can, or alternatively place hedges where you can. A few things, though, that I do want to mention as well, because there is a lot of news flow on the potentiality of Russia and Ukraine reaching resolution. I think that there's still a lot of uncertainty. Just because they come out of Kiev doesn't mean that they necessarily are going to leave all of the Ukraine. And it's very interesting, because on a given day, the news will lean more towards one direction or more towards the other direction. What I do want you to see is a map of the Ukraine, because these maps, they seem like a silly thing, but they will mean everything in what then transpires afterwards. And as I've mentioned, even though I do think that Europe will rally if this resolves itself, the fact is Europe is probably the worst possible positioning that you can have as a continent, with all due respect, with the exception of Norway and the UK. But the continental Europe is probably in the worst possible position to weather the aftermath of what happens. And so I want to really make sure that you saw these slides that our wonderful guest speaker, Professor Dan O'Brien, brought to us during his presentation. And that really is, this is a map of the wheat production in the Ukraine. And you can see Kiev is right here. So there's this little river that grows right here. And then at the cross of that is Kiev. It's right here, okay? And over here on this map, it's like right here. So wheat production, that moving out of Kiev does nothing to alleviate wheat production. That's all here, right? Down in these regions. As far as things go. And these regions are still areas for which the Russians have, largely speaking, continued to, occupy. We know Odessa, and obviously over here with some of the things we've been seeing in the news. So that's wheat right now. It's not great. Then you've got corn. Corn is a little bit closer because it's this northern region near the borders of Russia and Belarus to the north. That it's interesting because some articles are suggesting it plants in April. That's not what Professor O'Brien said. And that seems awfully late just in general, because typically in the Northern Hemisphere, corn takes so much, it's a little bit on the late side. If we resolve immediately today and they start planting, okay. But usually an April planting of corn, early April planting of corn is cool. A late planting, and that's not, I don't think that's quite how corn works, but maybe there's some farmers that do that particular crop that know better. I'm not sure. Yeah, so there's that. And then obviously as well, fertilizer is probably going to be a big deal as far as just trying to do a little bit of catch up, because the one plant that questionably at best got planted, probably did not, is spring wheat. And spring wheat's only about 5%, in fairness. It's not the biggest thing. But when you also didn't necessarily lay down more fertilizer across these regions that all had like some fairly aggressive activity, and lost also the ability most likely to power up the equipment that you would need to take care of your crops and take care of your farm, it's kind of aggressive to think that they put the amount of fertilizer you would typically put in to get the density and the health level of plants that would give you the yields that you would typically expect this region to provide. So this is just something I want you guys to keep your eyes on it as we start to see what particular areas of Ukraine are impacted over the next few weeks of discussions. So please realize that. The other thing, Professor O'Brien spoke about this a bit, and I had a lot of thoughts afterwards. Because the sunflower production, 40%, most of it goes to Asia. We in the United States, sunflower is not our deal, and we don't necessarily care about it so much. And he talked about the fact that palm oil has been really weak as far as production goes. It's something I also read, so it was really fun to listen to him about the substitution of sunflower oil palm oil, and soybean oil. The three kind of go together. So sunflower oil, which is all in this Western region, that is going to affect us in the Western hemisphere as relates to soybean oil. Soy actually had a great year last year. And so if you look at the charts for soybean versus corn versus wheat, you'll see it looks like soybean was just kind of like, you guys are way in front. I'm going to hang out here and not move. And soybean was not necessarily the best investment last year in the grain area relative to corn and wheat. So it's possible that for those of you that are more agriculture based, soy is going to be the interesting thing. But I think what's intriguing and is oftentimes forgotten is that especially in Asia, since this mostly goes to Asia and represents 40% of the oil deliveries for Asia, he said that it would offset palm oil. And palm oil definitely is something, oddly enough, that I've come across before. Palm oil is pretty much all Southeast Asia makes tons of palm oil. And they've had some issues in the last few years due to various Mother Nature conditions, et cetera. But palm oil is used oftentimes to replace in like a lot of consumer products. And it's used in lieu of using petrochemicals or things like that. So it's the case that this one is one to watch, because what will happen in the sunflower seed production and what is the impact to palm oil, and then by nature of that to actual oil, it's just something to watch. It's something for sure to watch. We'll be looking to that. Additionally, if this corn, if I'm right, and they're a little bit on the late side to be planting any kind of meaningful yield in corn, because corn is transferred into ethanol, that is going to have an impact for sure. And that was even before all of this conflict. We had already had that conversation about corn, because Archer Daniel Midland was already talking about what their ethanol margins were getting to given where oil prices were right now. So let's just all keep our eyes on this as far as that goes. And if there are opportunities that just arise because everybody gets way too excited about how the war has ended and hasn't realized that it's at some point, somebody's going to have to pay for this. And how are you going to pay for it? And what is the aftermath of what you just did? That's all going to create potential opportunities in this marketplace. I just want you to have that list in front of you. You know, we like fertilizer. We also continue to like oil. I would say among the oil stocks that I continue to watch more intensely, Devon Energy has actually gone up in my list because the valuations after this last earnings season are really attractive. But in fairness, all of them are looking pretty good at these valuation levels. Final thing I'm going to talk about is metal production. And this is part of the reason why you guys know I like Brazil. I've been very bullish on this. My goodness, I can't even remember what animal I'm focused on today. So I've been very bullish on Brazil. And as we've spoken about, materials, energy, consumer staples, that consumer staples for them really is actually food, whereas for us, it's more consumer products. There are some consumer, don't get me wrong, I'm not saying there's no consumer products in here. It's more the consumer staples oftentimes here is going to be people that actually grow this stuff out of the ground, right? So, so because 50% of this index is basically the three things that I think benefit the most, and because although they do have an election later this year, I think Brazil is finally in a state of greater stability as a country to finally take advantage of some of these things that are happening. My point is Brazil is absolutely on my radar screen. I still am very bullish this, which I should add the ticker on here. I believe it's EWZ. Yeah, I think it's EWZ. Just check it real quick. Anyways, I just really want you guys to consider it. It's not the most expensive stock at $37. If you're going to do options though on this, and I'll try to do some examples of it. If you're going to do options on Brazil, just make sure they're far enough back where it enters their planting season. Right now, in the spring for us is the fall for them. The summer for them is the winter for us. So just remember that. So we're talking about considering more like September farther back if you must do options on this. But if you just want to buy it outright, that's fine too. You know, there's even without this conflict that we've had going on, as you can see from the chart, the thing has gotten, you know, it's not, the dynamics are great for Brazil overall. And I put this for paid subscribers that have access to the Discord. This and the article that goes with it is in the Discord. And I just want to show you iron, which is a major produced raw material of Brazil, along with pretty much everything else, to be fair, nickel, et cetera. That comes from this region down here, which is still kind of the Crimea, the area that everybody is discussing. It also comes down here. You got a whole mess of different types of raw materials that are south of this line. Remember, Kiev is still up here. I don't know if y'all can see it in the map. Here, let me just try to increase the size a little bit for you. Kiev's up here. All this down here is all a whole series of metals and mining that is definitely something to watch for. It might also help make sense of why different things are being said and what areas people are focused on. But just wanted to share that with you. And the last thing that I'm going to talk about today, because I've brought it up so many times, is Activision. And just so you know, there were kind of two items that came out almost immediately back to back. And the first one is, this was from more or less today, the 29th. Yesterday, the judge approved the $18 million settlement in sexual harassment. And almost immediate, like last week, they were talking about this would be Activision CEO's payday. And so what is almost immediately started in the news press is that a lot of those women believe that he should be required to step down before the deal goes through. And so we'll see if that does anything to the stock. If that's all it takes, Microsoft was definitely going to fire him anyways as soon as he came in, or allow him to resign. They usually do it like a resignation, but you still kind of have to stay available for a lockup period of X number of period of time. So that was kind of already something that was going, but because this article came out with what his payday would be, upon the deal, given what he owns in stock, you're getting kind of this array of news items on it. Now, I do want to let you know that probably from his perspective, and who knows, I mean, like, my job is to just report this and then tell you how you might want to play it in the options market or in the stock market. But the stock, when it was trading up here at 111, people did believe it's cheap. And the reason they believe it's cheap is even at 111, it's only trading at like high teens multiple relative to earnings. This thing did grow earnings on the fourth quarter by 33%. So even at 111, the deal's being done at 95 down here, people thought this thing was cheap going into the quarter, okay? All of the news flow from here all the way down is related to, like, it would trade up and then as soon it would just get pushed down. All of this had to do with, especially from here to here. I think people just overreacted on the quarter, weird trading in the quarter. But from here downwards, all of that was related to lawsuits and various things that were just coming out like crazy. It really started somewhere around here, to be honest with you. But realize that the board is going to kind of see it this way. So getting rid of them at 95 looks like a discount to where the stock is trading. That said, news flow is news flow. This probably wouldn't be the thing that would make Microsoft back out, because it would be like, people are not dumb. I don't know another way to say it. When Microsoft bought this, it was very clear that they were going to have to deal with this issue in a couple of iterations. If anything, 18 million as a settlement is probably the lowest possible. That's like, from Microsoft's perspective, they made out like champs, because 18 million is a big fat nothing relative to what they're getting in the way of Activision, which includes these massive cash flow streams that were growing at 33% earnings, which makes the deal more or less accretive going in, meaning that it comes in, Microsoft's bottom line growth is around 30-ish%. So it just slots right in, and then you just cut costs left and right off of legal, et cetera, you roll people in. So it would be accretive very quickly for them, right? So there's that for at a minimum, because you basically bought the deal at 15 times, but it's a 30-time growth. You got me. Okay. Maybe we can go through that in a different video. So from their perspective, 18 million is a big donut as far as what it would have cost. I'm actually shocked the number was so low myself. So given that number, there's probably a second number that the management teams were thinking about that relates to dealing with this problemo, so to speak. But in fairness to the situation at hand, this might not, like, even if people sue, this isn't necessarily going to do much. And, even if you sue, it's not necessarily going to take away the fact that the guy probably has a load of options on Activision. So that kind of is what it is. I wanted to mention to you, and I'm not saying today is today is the day to do it, nor this is the specific option strategy you should take. It's more that I wanted to make you aware that it turns out with deal related stuff, it does end up on the options desk. And the reason it ends up in the options desk is if you think about what options are, they are an instrument that prices in the probabilities associated with whether or not that price is going to happen in the future, right? We've talked about that a couple different times in a couple different ways. As such, one of the ways that you can do anything of this nature, and with Activision, because it's an all cash deal, it's a little easier to do. If it's not an all cash deal, boy, you got to have some advanced skills in order to do it. But in an all cash deal, it's ever so slightly better to do it, easier. I still think that if you're a beginner, you should probably just buy this outright and then buy puts in a very affordable manner. We can go through that a separate time. Yeah. Okay. So one way that you can do this, okay, not saying that you should do this, is that you can do what's called a diagonal, which is in this category that sometimes people think of all of them as calendar spreads, but really this is a diagonal. And what that is you would do something like this. You would buy the Januaries, because we know now that the deal, like Sanjay said more than once on the call, that the deal would be done in the first quarters, where he's thinking some people thought it could have been done in December. Others, if you take the farther end of it, you'd be looking at March instead of January. But really, there's one overhang on this stock that needs to be resolved, and maybe a few other things. Mostly January is one to look at. You could look at the same thing for yourself using the March. Now, I use these two only because the spreads weren't so ridiculously wide. We couldn't even have a conversation. As you can see, the volumes are very weak on these. So no matter what you do, you got to put it in as limit order. But for instance, if you felt certainty that the deal would close, or at least the spread on the deal would close before the deal gets done, then this would be possibly something to consider. You would consider the 82.5s, which are trading 340, 440. So that would be, let's call it $4, right? And you could sell the 85s that are in September. Okay. This would basically, right now, an average cost would be $2.75. And my suspicion is if you try to put this in, you probably would get it done for $2.75, even though these spreads are wide in some cases and there's no volume going on. There is somebody that will sell it to you, for sure. But anyways, you could do that for $2.75. You would reconstitute the stock at $85.75. If the deal closes in January before January 20th, or alternatively, if they just announce that they will close on X date for shareholders of records, this gap it'll just smack together so fast it's not even funny. And you would basically collect the $9.75. You might have to pay a little bit, so call it $9. And you would have outlaid $2.75 of capital. So that is a way to consider doing it. And if you were like a little more chicken but loved this, you should look in March instead of January, so at least get you to the end of the quarter, that sort of thing. Additionally, if some of this resolution just eliminates, if we get significantly more clarity, I have said more than once, a 20% discount on this deal seems a little bit on the aggressive side for the fact that there's no DOJ issue. This is really just FTC, and it's a vertical merger and not something that's crazy. And it doesn't have some of the elements of other technologies such that you got another country that's going to put the kibosh on it. So that's part of the reason why Microsoft is able to say on its call, think of its first quarter, you know what I mean? And it wasn't like, anyways, you got my point. But as this spread tightens, if it tightens over 82.5 if it tightens up to 86, let's call it, then you'll be trading 1 for 1, and at least you won't, get it. You'll have some safety there. Alternatively, you could do the 82.5s as well. I mean, there's more than one way to do this, but I wanted to show you that there's more than one way to use the options market to express a view, so that you can look at that. Feel free to ask me questions if there is something that you're interested there. And with that, I'll go ahead and hit the pause on today's episode. Are there any questions?
Hey, May, that Activision, you're saying January 23, March 23?
Oh, sorry. No, it's going to be January 23rd and September. Here, let me go back to it so it's easier to see. Sorry. And I would say for this, I just did this as an example. So I think that anybody that's interested in this should just have a moment to think about what actually makes sense. Do you know what I mean? What, as you know, I know for you, you've got a bunch of people that really have some very fierce backgrounds, if you will. So they probably could do a much more engaged discussion on this. But in this particular example, we're buying the Jan 20s at, call it $4, because that would be the mid here. And we're selling the September 16s at 85, right? So essentially you've got what you're hoping for is this front leg, it'll just expire worthless or expire more or less where it's at. You are protected on this because this is still a bull spread. Because if you look at the deltas, well, I didn't put the deltas on here, that would have been helpful. This leg is lower than that leg. So this leg will move more aggressively than this leg back here. So even if it crests over 85, you should more than make enough on the back leg to compensate if this thing moves up. But what you're hoping for is basically for it to close in September underneath 85. And then if it's more than 85, you just either collapse the whole thing and take your profit, or alternatively, just go ahead and take the loss on the 85 because you've made up for it on the 82.5 leg. That's how it will move.
So January 23, October 23.
January 20th, 2023, and this is September 16th, 2022. So this September and next January.
Oh, this September. Okay, gotcha.
Yeah.
Okay, one more thing. I think the yield curve, Ed Yardini, I heard him, he's been around a long time. He figures yield curve as the Fed funds, which is just 0.5 versus the 10-year.
Yeah, that makes more sense to me by a lot.
Okay.
I think that to me speaks to me. Like if someone wants to use the 10-year because they're trying to show front, because the banks will borrow. I mean, the banks will lend and also borrow. Well, let's just say it correctly. The banks take in money and then they give you an interest rate for the most part, right? So net interest income isn't this 2 and 10 that everybody's using. Net interest income for a bank comes from whatever the rate it is I have to give you for your deposits, your time deposits, right? Whether you got a money market account or whatever it is. So that's how I took the money in. And then mostly I lent it out to mortgages. So the 10-year makes sense to me because I probably did a set of mortgages that were adjustable rate and then a bunch of fixed rate mortgages as well. And if you look at the back part of the curve from 10, 20, 10, 15, 20, 30, it's very flat. It always is that flat because that's the nature of that curve. All of this stuff in the middle is very interesting and it is absolutely tradable from 2-year to 10-year if you're a bond trader. But as far as its impact on the market, on incremental changes, very questionable. So if he's doing front, even if he's doing the 1 month to 10-year, I would have a lot more of an understanding of why that is that someone will be doing that. But but this whole 2-year, 10-year is rather arbitrary. I agree with him.
Antiquated, right? Okay, thanks.
Yeah. Any other questions?
None for me.
Okay. I'll go ahead and close it out then today. Good luck tomorrow on month end. It'll be very exciting. Take care.